Hey folks, welcome to what do we got? Wednesday, the 2nd of February 2022. And we have January behind us now. January, bit of volatility, a bit of talk about rate hikes. Well, a lot of talk about rate hikes, and the market's up. We're up here, man. I mean, we're not on all time highs, but the dip is being bought. Let's see what we can do with February, shall we? Really quiet morning in Europe this morning. We're waiting. It's about 20 past 9. We're waiting on the CPIs month on month and year, and core CPIs year on year out of the eurozone in about 39 minutes. Oil holding it on quite well to the gains that it took out of yesterday's session. I'm looking for breakout territory now, actually, on oil. The bonds, they need to come lower. They need to come lower. So does the Dixie. Generally, I think that's going to see gold getting back up in the range it's been in anyway, but further upside on gold. I know one of the traders in here is looking for that one on his CFD book. So anyway, let's get over, have a look at these markets and see what we can see. So we're just going to drop DAX out here, but really support coming in 100 EMA there before I drop it off. And Euro stocks holding on the 4200s. We were kind of looking at that yesterday, kind of a complex pullback going on there. But as you can see from the NASDAQ, we'll pull up the daily for reference here. As you can see, the dip has been bought. That's right. So 13,869 is really the level that I've been tracking that it kind of came into here. Hopefully a few of the team members are running this on the multi-day, so the medium-term trade for the swing. But I can already see that there's going to be a bit of trouble ahead near here as we kind of come back to test on the channel that we dropped out of, right? So what's gonna line up with, I don't know, in the macro picture and of news. I think there's going to be a lot of chat around tech and value and all that sort of stuff, and the yield on the bonds once we get back on up to test here at this high here around 15,690s. For today's trade, really, we've gotten back through this line in the sand we have here. All right, 14,989s up to 15,110s, and the trend back up here on today's R1 at the moment. And actually, I have dynamic pivots on this chart. I'm going to actually have to take them off. But really, the trend is coming in at 15,600 up at the tops here. So, can we rally? Well, you've got a gap, which is this line in the sand open here. Technically, the gap on trade is from the close to the reopen. That's technically your gap on the NASDAQ. So let's see how this trades. Is it going to wipe out the gap in this session? It doesn't have to by any means, but we do have protection on the downside from the 50 EMA should we get into a sell down here. And otherwise, its targets for me 100% 15,492s on the upside. All right, so that's the NASDAQ. And SPOOs, looking over here on the daily, couple of sticky areas now. 50 EMA to trade just above this line in the sand in yellow that we're tracking. Because it's yellow, that denotes that this is a former gap that has been traded out. But I'm going to, because it's traded out, then I change this to grey. But I do like to track these over time, and you can see it has come into play as a line in the sand for the SPOOs. So for us to reclaim this and find support on this, then you can get into the longs 46.19 and 3/4, I think. But you got to be careful. 100 EMA is the support on this right now, below 45.42s. You can see that here. So we're in this real knot now. And we have had, just a point here, is we have had a crossover of the 20 on the 100. All right, so just be careful about the longs in this. I know a few of the traders have bought the dip and are holding these and through various different expressions, outrights, puts, or puts and calls. and what else are they on? CFDs as well, and ETFs. So lots of different ways to expressing yourself in the markets. And the Dow here, of course, 35,312s. Very nice little area, weekly bars here, but very nice sort of confluence of a couple of highs coming in to give me that level here, going back to kind of late August, or sorry, early August, and early through to early September at the resistance there. So big resistance point here for the Dow. But I think we're going to get back above and trade into the top of the trend on this flag here, or yeah, sorry, pennant. Are we going to make all-time highs? I can't talk about that right now because I don't know. Um, who knows? What else are we seeing here? WTI. Let's have a look at oil, which has put in a pretty decent performance. Um, we're on the weekly bars here. You can see the support on this week has come in 86.80s, and how I mean, look at this, like 86.80s just being walloped so many times all the way back. Once we achieved it and started to settle in, well, we achieved up there Wednesday, 26th of Jan, but really since the 27th, that Thursday, look at how supportive this area is. Lovely, lovely, lovely longs from down there yesterday. You just had to survive the flush out. All you need to do is wait. All you need to do is wait and know what you need to see in order to then get activated, take that trade on the long, and back up to that prior high from last Friday there, 88 spot 84s. So we are in a tight range here. I'm going to actually keep tracking this gap area that has closed, but again, it's a bit of a line in the sand, right? Look at this here. So I am tracking it for a reason, and it gives me optionality on entering basically under different environments, whether I want to be long or short. So that's oil. Pretty simple stuff here. What else can we look at here? The Bund. Yeah, look, the Bund bottom. Sorry, I took my head off the screen here. The Bund on the bottom left of your screen. You can see I'm interested in this area below 168.48 for the longs. Explaining that trade on the daily, it kind of looks like this. All right, so going back to the lows that we had in late 2019, I just got this zone, sort of, just a zone of the excess lows here to point that out. So 168.48. I'm looking to be a buyer in this sort of zone here, and see if we can kind of get a retest back up on the trend that has been clearly broken, as you can see at this point here. From really, it broke down actually last Monday, 31st. So, oh, sorry, this Monday, 31st, it really broke down. So, all right, that's it on the bonds. TNotes, no, dollar. The dollar does, I think, have a bit to pull back. I don't think we're done where we sit right now. It looks like the pullback is actually done, I have to say. A little line in the sand I've got here, but I'd actually much prefer to be getting involved in this on a pull down to what is S3 today, 95 spot 53s, and then look to be either long the dollar or short the euro at that point, one or the other. So that's kind of it on that. And yeah, gold. Gold is kind of testing above the 1800s now. Just testing is the key word. But the trade really on this is quite simple. It's a cross back up to the resistance area, 1839 spot 4 to 43 spot 4s. But it's got to hold on the 18s here. Got to hold. If we put in another couple of hours in this session below 18s, I think we're going to probably have to wait a little bit longer. So look to your correlated assets, the Dixie. That picture for the longs on gold really fits in with the further shorts on dollar down here. So, you can start to see the picture that I'm trying to form in my head about what's happening in these markets. All right. So that's it for me for another pre-US session. Please hit the like and subscribe button in YouTube, and you get an alert anytime we go live with any of our chats on the markets. So if I'm not talking to you, have a great day, and just look out for taking only the good trades. Leave the bad trades alone. All right, see you.